Okay, everybody, let's get started here. It's 10 o'clock, give or take a couple of seconds here in Chicago. My name is Jim Cagnina with Infinity Futures, and today we're going to talk about the E-mini Russell 2000 stock index futures market. I do want to remind everybody trading futures, options on futures involve substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a large combination of leverage and volatility. And although that could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund a futures trading account, particularly a day trading account, with risk capital. And if you're not sure where you fit on the risk capital curve of things, give me a call or give one of our customer service reps here a call. Everybody here is passed the Series 3 exam. They're NFA members, registered with the CFTC. And I think without exception, the customer service reps here have been here for all of them for many years, and they have a deep institutional knowledge of not only these futures markets in particular, but they interact with traders like yourselves on a daily basis, and on a and they follow the markets on a daily basis. So they're pretty bright cookies, and low pressure sales shop here. You're not going to get that, and if you do, complain to me, and I'll take care of that. But you won't. So let's go ahead and dig into it. Tom's asking about the Treasury bond market. We could talk about. We'll talk about that at the very end, Tom. Let's get into this right now. Ron says no sound. I'm trusting everybody could hear, right? I'm gonna tell Ron we're all okay. We are good. Log out, log back in, log out, and back in. I'm gonna send that to him. All right, let's go ahead and get started here. We talked about risk, and we're going to talk about the E-mini Russell was, it was with the CME Group for many years back in the day, and then they lost the listing, and it went to the ICE exchange, the Intercontinental Exchange, for several years. The CME was able to bid back, get it back in July 10th, 2017. So oftentimes I see people with charts that are like, hey, my chart's only go back to 2017. Keep in mind, it was on a different exchange back then. So you're going to see some weirdness on the charts depending on who your chart vendor is there. But it was CME, then ICE, then CME again. So we're here with CME for good, and which is good for fees and stuff like that. I'll talk about that. Yeah, it's not that. Yeah, it was the TF back then. That's right, Chris. Good call. So, and just remind everybody, we're Infinity Futures. There's our website, and if you haven't already, feel free to try a real-time account, practice account, not real money. That's what we're going to be using today, a simulated account today. The simulator's really good at it's real-time data, and it's really good at simulating actual trading activity at the exchange. We have our weekly webinar signups, which you guys are here. I appreciate that. We're going to continue to do those throughout calendar year 2019. And we have some information on margins. I'll talk more about that on our website. That's something to consider when you're trading with Infinity. And we'll talk in a little bit more detail on margins. And we have our online account forms. The newsletter sign up. Newsletter goes out every Saturday and kind of just gives everybody a heads up on what's going on the next week. Feel free to sign up for that. Charting Club is our new endeavor. Charting Club is super cool. It's a members-only website. It's free to join. You don't have to be an Infinity customer to join, although we wish you were an Infinity customer. But you log in, you create a username and password. It's all auto email stuff. And we have two different kinds of videos. Sierra Chart how-to videos and some technical and fundamental analysis types of videos. We also have a tip of the week done by Marcus Zielbauer, which is pretty awesome. And we're continually building this library, and we take suggestions. This is only a few months old, the site, so feel free to use that free resource as you go through. And then lastly, I hope this is lastly, we have our YouTube channel there, /Infinity Futures, a lot of good stuff there. Our Twitter @infinityfutures.com. Follow us if you can. Facebook, Make the Trade, Instagram, and LinkedIn. Now, just real quickly on the Twitter thing, I follow Twitter all the time. I follow traders, I follow analysts, and I follow Fed members. I follow economic releases. It's really, it's not it's not for children. You could use it as an adult, and you could use it to get some really good insights and information. There's a lot of garbage and there's a lot of nonsense on it, but you get some really good opinions and some good information. So even if you're not following Infinity, there's a lot of good futures trading and regular trading news there. E-mini Russell 2000, CME's definition: the Russell 2000 index is a broad-based market capitalization weighted index, which is different than the Dow that we talked about last week, 2 weeks ago. It's market capitalization weighted, and we'll talk about what that means in a second. Encompasses a range of sectors of the economy. So the Russell people, and this is a business, right? The Russell has a business managing, maintaining, and marketing these indexes. They have this thing called the Russell 3000 Index. And by the way, it's maintained by the FTSE Russell, which is the merged, combined, consolidated entity that owns this index, which is a subsidiary of the London Stock Exchange Group. But they take the smallest. The Russell 2000 is the smallest, based on market cap, of the Russell 3000 index, and they're all small cap stocks. Okay, so it's the smallest of the broad-based, very broad-based Russell 3000. And market cap is simply the share price at any given moment times the number of shares outstanding, and it changes obviously every day, right? Because the share prices change, and so that number changes a little bit every day. There's three general categories. There's really 5 categories, but there's 3 general ones that have been with me at least for most of my life, and it's large cap stocks, the really big companies, which have a market cap of greater than $10 billion. So share price times the number of shares outstanding is greater than 10 billion. Mid caps generally considered between 2 and 10 billion. And there actually is a mid cap S&P futures market that trades. And then small cap is less than $2 billion. And these are general categories. These aren't levels that kick a company in and out of an index necessarily. But these are general categories. There's micro caps, which are really small, and there's macro caps or super large caps, which are really big. But these are the 3 main ones that we know from history. A couple of statistics on the Russell 2000. The average market cap is right there at that 2 billion mark. Remember, less than 2 billion. It's right there. The median is about 700 million, and then the largest one, there's a big one in there too, 6.2. So it just kind of gives you a good sense of it. And there's a lot of stocks. There's 2,000. This is a lot. Here's some of the ones you might be familiar with. You might know what Etsy is, Five Below, Planet Fitness. I wish I should probably be better with my Planet Fitness membership, to be honest with you. But so these are some of the, and there's a whole bunch of them. You can go to the Russell website and see them all. These companies, the conventional wisdom is, these Russell 2000 index futures are more sensitive to domestic issues because they focus on domestic products more than other companies. The reality is, the Russell 2000 has about 77% of these companies focus almost exclusively on domestic sales, whereas the S&P 500 index is at 72% of North American sales. I know domestic, North American are 2 terms that aren't exactly aligned, but so this idea that trade tensions and other stuff like that doesn't matter, maybe not so much. Interest rates, maybe yes, and I'll talk more about interest rates as we go forward, but that's the driver, in my opinion, of a lot of price action in these stock index markets. And microeconomic factors similar to in the Dow, right? We have interest rates, we have inflation, we have unemployment, we have economic growth are some of the macroeconomic factors that the Russell 2000 index and underlying stocks are sensitive to. This slide might be out of order, but we're going to talk about it anyway. Here's today's economic announcements, right? So we have Jeremy Powell, head of the Fed, spoke last night, right? And then we have Great Britain had some inflation reports and some of their central bank announcements and minutes came out. The jobless claims in the U.S. Robert Kaplan speaks. He's the Dallas Fed chairman. 9:15. That already happened. These are Eastern times, by the way. 9:30. Clarida, Fed vice chairman, and then 4:30 Fed balance sheet, and tonight James Bullard, St. Louis Fed. Now, I add these to the economic calendar importance list because they are important. It's the Fed's interest rate policy and balance sheet policy, in my opinion, has been very instrumental in this huge long-term bull market going from 2008 all the way to November of last year, and then we had a significant dislocation and hiccup, which we'll see in the charts in a minute, and now we're having a rally back up, and a lot of this Fed speak had to do with it. A lot of this Fed analysis had to do with it. So when these folks speak, sometimes it's important and sometimes it's not. As an example, James Bullard tonight speaking at where he got his degree at St. Cloud University in Minnesota, or his master's degree or law degree or whatever he has, and so he's speaking at a college, and it's not an official, hey, this is a Fed announcement speech, but he'll say some things that might give us clues on what he's thinking or what the Fed is thinking, and the Fed has a whole bunch of independent characters running around in it, but these are important things in my mind. And if you could, you could even go on Twitter and kind of get some of the basics. The other thing that I kind of didn't talk about the last few webinars is event risk versus regular volatility, right? So there's certain events that happen we know are going to happen. These are events that are set in stone somehow, and we don't know what the outcome is. The outcome could be good or bad or yes or no or plus or minus. And here's a couple of examples, right? February 15th is supposedly the new deadline, right, for this whole, debate on, the wall and immigration, and people think they know the answer, and you might not know the answer. You might be surprised, you might not. But this is an event that could cause, a gap up or a gap down or reversal of trend or a continuation of trend. So this is an important date to know. March 1st. This is a self-imposed kind of trade deal deadline with China. This is an important date to know. March 29th, very important date to know. Brexit. This is the Brexit deadline. Are they going to reach an agreement on how they're going to how the UK is leaving the European Union, or is it going to be a hard exit? In other words, no agreement, and ships will fall at where they may. So let's get into the Russell 2000. It's like I said before, the ticker symbol is RTY, right? It changed when it came back to the CME group. The front month is March. It's what we're trading right now, and 9 is 2019. This is kind of the anatomy of a futures ticker symbol. It's a four annual contract month calendar. H March, M is June, U is September, and Z is December. We all are probably pretty well aware of that. This is a 23-hour market. We open Sunday at 5 p.m. We go all night, all day, close at 4 p.m. the following Monday afternoon, and there's a 15-minute break at 3:15. It's weird, that weird 15-minute break from 3:15 to 3:30. And I get calls all the time. Hey Jim, my chart stopped working. And for new traders, that's a totally legitimate call, because you wouldn't know. You wouldn't know there's this 15-minute break. And then we close Friday for the weekend. So nothing Friday night, nothing Saturday, nothing Sunday morning. These are. I'm sorry. Thank you, Chris, for pointing that out. Chris asked EST. No, these are Chicago times. I'm sorry. These are Central Time, Chicago time, not Eastern Standard Time. And while I'm looking at questions here, Paulie said Kudlow commented trade negotiations about 9 this morning. Yeah. So these are other characters you got to listen to for trade negotiation information and stuff like that, which could have some impact on pricing. Sometimes some of the characters like Kudlow, they don't you don't know a week ahead of time or a day ahead of time or 2 days ahead of time when they're gonna talk. This may have been a scheduled press conference. I don't know that Paulie's talking about, but it could have been, he got on TV somehow and started talking about it, or just decided to talk about it this morning. So that's why you got to kind of pay attention to the news. Delivery and rollover, financially settled, not physically delivered. You're not going to get 2,000 stock certificates in the mail if you hold a long position. You're not going to have to deliver 2,000 stock certificates if you hold a short position. The last trading day is March 15th here for this particular contract. It's the third Friday of the contract month up until 8:30. Rollover, more importantly, is March 7th. This is the date you got to keep your eye on. It starts 8 days prior to the last trading day on a Thursday. That's the definition of what it is. Okay, so we know by March 7th we're going to start trading what? The June month, right? Okay, M equals June. Here's just a little, I just cut and paste this from the CME Group website, and if you just follow along here, you could see all the different roll dates going forward. We're all the way here to, believe it or not, we're already here to March almost, and here it is for the next couple of years. I thought that would be interesting to know. Margins. Now remember, margins are a double-edged sword. They can work for you as well as against you. It helps you capitalize, provide a smaller amount of capital for your trading activity. Alternatively, it will magnify losses and magnify gains. And on the losses side, as we all know, psychological events happen in your head when you see a negative number on your trading ladder. So be careful, be ginger with the day trade margins. Yes, Infinity offers $500 day trade margins for this particular market. Use it gingerly and appropriately. Initial margin as of the date that I wrote this, that the exchange sets to hold a position overnight, is $4,260, and maintenance margin is $3,550. And these are some of the lower margins that we have on the stock index side of things, because it's a smaller market. It's a smaller contract size, and I'll show you what I mean by that in a second. Tom, rollovers. Tom asked a good question. Is rollover the 5 p.m. ET open? You're gonna see when you wake up in the morning and start. Yeah, I mean that the night before this day, calendar date March 17th, you're gonna start seeing volume moving over. It's not gonna all move over immediately, right? It's not gonna all be in the June, March 7th. You're gonna have folks still trading March, and it's going to be a gradual process. The balance is going to, move over to June fairly quickly, but it's not instantaneous. So yeah, you could, the day before that or the night before, you'll see volume there also. So I would take a look at the DOM. I would take a look at your quote board and see, okay, how many contracts are being traded where, and you want to be where the most volume is. So it's not an exact time on rollover, which is kind of weird, but okay. So notional value of the Russell, it's really simple. Notional value is the price times $50. It's a $50 point per contract. If, as an example, let's say we're trading at 1550, and we're close to that today, you multiply that times 50, and the notional value is $75,750. That's a pretty big amount. That's a big contract size. Okay, so keep that in mind when you fund in a futures account. Let's say you have a $10,000 account balance, and you trade one Russell. It's a 7.5. Leverage is 7.5 times. Okay, and you bring it down to a day trade margin level, and your leverage is a lot. Way bigger than that. So be careful and keep that in mind. It is smaller, though, than, let's say, the S&P. So there's the equivalent S&P contract notional value at the same time that I did this calculation was 135,000. So the Russell's, about 60% smaller, if you could think of it that way. Going back to Mark asked a question on rollover. Let me just take it so it doesn't get lost in the shuffle. Should we not trade a day before and after rollover? Mark, do you mean from an opportunity point of view, from a my personal opinion is, yeah, from a risk point of view, I think there's legitimately institutions rolling over positions that over a period of a few days that could have could cause price to react a little differently than you expect. Alternatively, it's not all done in 1 minute. Rollovers aren't all done immediately. It's a process that takes time, and that process results in more volume, right? More volume, because if you have a position in the March, you not only do you have to liquidate that position, but then you have to create a new one in the June. So you're doubling up on the volume. So that extra volume is actually helpful. So I wouldn't be scared to trade rollover. I would just keep in mind that you could have, some in some of the thinner markets, you could have some price movements that are unexpected, that aren't necessarily directly related to a technical level on a chart, but not too much, in my experience, not too much. Dennis asked a good question. Does rollover mean closing the current position and opening another position? So, Dennis, most of us here are day traders or swing traders. And when you were trading a stock index market, and I'll pull up a trading ladder in a second and show you, you want to go where the most volume is. So the math and all the technical specifications of a Russell 2000 futures contract are the same regardless of what month it's traded, but you always want to trade the front month, which is where the volume is, where most of the volume is. And you'll be able to see that visually on a chart or on a trading ladder. But in general, for people who are holding positions, for position traders, for institutional investors, for hedge funds, for commercial entities that have decided, hey, we want to, for whatever reason, maintain a long position or a short position in the Russell for longer than a couple of days, for longer than 3 months or 4 months or 6 months or whatever their time horizon is, then yeah, they're going to have to liquidate the expiring contract and recreate the same position in the new month. Okay, does that make sense? It's kind of it's easier to see it than to talk about it. But Khalid, we just talked about the Russell 2000 notional, the mini Russell 2000. This is the mini Russell. I don't have the word mini up here. Sorry. This is the mini Russell 2000. This is the notional value of the mini Russell 2000. This whole presentation is mini Russell 2000. Tom asked, what happens if you don't liquidate a position before expiration? If holding an RT position expires, does it automatically roll over? It does not automatically roll over. Oops. If you don't do the rollover and it expires, expiration date 3/15, you're still holding that position, then there's a process to decide what the liquidating value is of your position, and then it's cash settled. In other words, you're automatically out of that position, and then you have the wherever they get you out of the trade, you're out of the trade. You're not getting another trade, but they're just you're liquidated, and they figure out based on closing price what your new account balance is, and then you can go ahead and go forward. And usually that's not beneficial to you. So don't hold one just because you forgot. You don't want to go in and get rid of it. You don't want to go in and liquidate it. But it'll cash settle. It's called cash settling. Some commodities are not cash settled. They're physically settled, right? They'll bring some soybeans to your house in a big truck. You don't want that either. But these are financially settled. Okay, so we talked about notional value, and this is the other thing that's important here about notional value is a smaller contract. So if you're new to trading futures, and you're more interested in some of the smaller, and it's not a lot smaller, but it's smaller. I'll show you more on the chart. But it's a good market to consider trading as opposed to some of the bigger bigger market. So if you have a small balance account and you really want to learn and do some basics, this is a good way to do it. This is a really good market to take a look at. Here's an example of the tick size is $5, right? And there's 10 ticks per point. So you can see it's in tenths. This is traded in tenths, and a point size is 50, but each increment is worth $5. Okay, so from 24.40 to 24.50, it's $5 per contract. And this is kind of what a trading ladder looks like. We'll talk about that also in a second. And here's people who want to buy at different prices, and these are people who want to sell at different prices. And these are actually contracts that are in the order book at the CME Group, waiting to be filled. Some of them will get filled, some of them won't be filled. All right, I think this is the last slide here. We're going to go to some charts. The CME, I get this question a lot. The CME Group consists of 4 different exchanges. And each exchange, sub-exchange within the CME has different data fees. In this particular case, our CME exchange package, the CME itself includes the E-mini S&P, the NASDAQ, and the Russell, and then the currencies. That's a $6, with Infinity, that's $6 a month. It's $5 from the exchange, $1 from the FCM. So that's a $6 a month package. Now the weird thing is, if you wanted to trade the other stock index, right, the mini Dow, we talked about it 2 weeks ago, that's actually still a CBOT exchange product, which is a sub-exchange of the CME Group. If you wanted to add that, you're going to add another $6 of data fees. Okay, and that's how I get that question all the time. Why is the YM treated differently? Well, when CME Group acquired, however they did it, the Chicago Board of Trade, then all of those markets moved over to the CME Group, and they became a subset of the CBOT exchange. Okay? All right. Tom asks $100 per point. Oops. What happened to my... it's a $50 per point, Tom. $50 per point. Oops. Let's open up some charts here. Let's open up a quote board here. Let's open up a trading ladder here. Oops. Come on, Jim. Keep your fingers on the pulse. Okay. So where's our price at? Here we go. Here's a trading ladder we talked about. Here's the price ladder, right? So we have prices by 1 tick increments in the middle, bid columns on the right, on the left, ask columns on the right, color coded, very common. Volume, since I logged in today, at each different price on the trading ladder, and we broke down to, I don't know, 1498. We're having a down day, and so this is what it looks like. And we'll go ahead and put some sample trades in there in a minute, just to show you how the trading ladder works. But let's take a look at some charts here. So in the Russell, remember, because of that weird data thing, I'm doing a weekly. I'm not looking at a monthly. I'm looking at a weekly, dating back to as far as I can. And we could see, as we all know, we had this raging bull market since 2008. We peaked up here. I said October earlier in the presentation. I should have said September. And we had a pretty big correction, right? We had a pretty big correction. So the bull market ended. We went into a bear market, and now we're retracing back up. Now we're slowly kind of fighting our way back up to bull market status again. And let's just go to a daily so we could talk about it better. Here's a daily candle, and let me position this a little bit better so we could see the whole story. And we had a lot of interest rate talk and a lot of interest rate speculation, and that caused a lot of this, especially down in here. Okay, what I've done in this chart is I've kept it simple, and I've done a Fibonacci retracement from the high to the low, and you could see. I didn't put the 0 line. I didn't put the 100% line. The software allows you to put to display what lines you want to display. But I do have a 50% retracement here, which we just breached on the downside, 1505. We have a 15.64%, a 15.64 price point for a 61% retracement 61.8% retracement, and then a 1446.1 at the 38.2%. And these are my general, we're trading between the 38 and the 61 right at the 50. Okay, that's kind of important to me. That's number one. I have this neutral zone where I have these dotted lines. These are manually drawn lines that I drew to try to identify support and resistance levels over time, or what I would call price happiness over time, and then narrowed the zone down a little bit more. So when I say neutral zone, in my mind right now, I'm thinking sideways market. I'm thinking we may not necessarily be in a bull market anymore. We may not necessarily be in a bear market anymore, but we're sideways, which is good, actually, because if we were in a bull market, I'd tell you, let's look for places to buy. If we were in a bear market, I would tell you, let's look for places to sell. If we're in a sideways market, which I think we're in now, I would say we could look for buys or sells. We can, we have two shots at the title. So that's kind of what I take out of this particular chart. This little line up here, this, I don't know, trend line, support line, I manually drew it a couple days ago just to see if we, close below it or continue above it or what we do. And you can see right now we're on our way to closing below it. And I could open this up a little bit better so you could see it. You could color code this however you want to make it look a little better. So we'll see if we continue, and again, this is a manual line I drew. It's not scientific. It's not based on some mathematical formula, but I'm just eyeballing it to see what we're up against. And keep in mind, I'm not the only guy drawing this line. There's a lot of people drawing this line. It's a basic trend line. Okay, let's take a look at the market profile today. The market profile today was interesting. Yesterday, not so interesting. Before we talk about today, let's look at yesterday. This is yesterday. And we have what's nearly a perfectly symmetrical, make it a little bit easier to see. Bear with me here while I do some chart stuff here. Nearly a perfectly symmetrical bell-shaped Gaussian distribution with the point of control right there in the middle, more or less, 1518.5. On the right side here, this is a volume profile, which mirrors the market profile, and it's based on different math, but I like to show it side by side to take a peek to see where we have gaps and differences. Again, the point of control right there is right at 1518. This is sometimes rare. This isn't rare on sideways markets. This is rare on trending markets. But it's a good profile to trade off of because traders are selling prices above market, they're buying prices below market, and they're trying to capitalize on the idea that this market's going to revert back to the point of control all day long, which it did all day long. So there was a lot of small range trading opportunities yesterday. Let's take a look at today. And I actually have today bifurcated between two different, let me fix this so you can see it a little bit better. I have it split. I'm going to unsplit it. I split it at H. Let's unsplit this. I'm going to go ahead and unsplit it, and then we'll split it again. So I'm going to say undo all splits. Now, my settings, before I even talk about that, are 1700 the night before, right? So 5 o'clock last night, all night, all morning through the European Open, all morning in the U.S., and my end time for this particular display or analysis is going to be today at 1600, which is 4 p.m. Chicago time. Okay, so that's how I set mine up. From open to close of that trading session. And so here's what we have, and we don't have a perfect symmetry anymore, right? We don't have a perfect symmetry. We have a breakdown, a pretty big breakdown. And initially we had a balance that was starting to form here, 1508, which is still a good 10 handles below where we ended up yesterday. And now we're making new lows here. So we're trending down. Today's a bearish day right now, as of 10:30. Now, what I would do here is I'm going to split these in half, and I think I'm going to split it at H. I'm going to go to an H. I'm going to right-click, and I'm going to say split profile here. Okay, so now I have 8:30 to 9, which is the initial balance here in light blue. 8:30 to 9, initial balance here in light blue. This on the left is last night, from 5 p.m. Chicago time all the way to 8:30 in the morning Chicago time. So this represents the night session is what I would call it. This represents the open of the cash market, right? This initial balance, and then the rest of the day going forward. Okay, so that's what I'm looking at. And we do have a pretty relatively linear, vertically linear profile right now. We don't have a lot of bell shapedness to this. So right now, the market's going down. Just looking at this alone, I would not give me confidence to buy anything. Even a day trade, even say, I'm going to buy the low and put a tight stop in, this is suggestive to me of continual down without knowing anything else. That's what's going through my mind right at this very second. So let's go to the Russell. Let's go to the 30-minute chart, where I think it's a good chart to look at. And I have a couple of things going on in this chart. This is a candle chart. I've highlighted the open, 8:30 to 9:30 in gray, this gray rectangle. I have volume profile on the right. So you can see here, and actually it scales to, volume is going to change as I move the axis down at the bottom, right? So if I wanted to go till midnight last night, it's capturing what's seen on the screen right now. You could change your setting to volume to capture a certain time frame, but I have it scaled, right? So here's midnight last night. And here's what we have. We have an awful lot of volume up here between, 1508 to 1510, 11. Up in here, you can see from the volume profile, we have less as we go down. Now it's still early. It's only 10:30 in the morning Chicago time. It's kind of observation number one. Down below, I have a momentum. The momentum indicator in this is this dotted blue line. And I'm really trying to use this more and more in my analysis to say, hey, does this momentum help me or not? And I have a moving average in the green, and this is all 10 period. I have a moving average in the green, so I'm looking for moving average crosses. I'm looking for breaks from the 100 line. This is the center line because I have it set as a ratio. This is a 100 line. And so we could see we had a couple of signals today. We had during the open, actually during the open, first hour of the open, we had a cross up. That was weak, a weak attempt at up, and then we broke down, which turned into a good signal, right? It turned into a strong signal here. And signals really happen, they happen during the middle of a bar usually, right? So you got to be a little bit anticipatory. If you were anticipatory here, you would have been wrong. If you were anticipatory here or here, you would have been right. So the point is, wait for confirmation on your move, and sure enough, we got some confirmation here when we started making new lows. Here around 07. Okay, we got confirmation, and it turned out to be a good signal. Let me just put a vertical line here. It turned out to be a good signal here. But we had more than one indicator, one more reason why it was a good idea. Yeah, we can see it on a lower time frame, Chris, and we're going to take a peek at that right now. Let's do it. Let's go to Russell 15-minute. Here's a 15-minute. We've gleaned a little more detail from the 15-minute. It's a duplicate chart from the last one. I just painted a high, what I would consider a significant, at least for today, resistance level at 16. But we could see the crosses again. We could see this signal right here, which again turned out to be a really good signal. It's not always a really good signal, but this one turned out to be a really good signal. Same momentum indicator, crossing the moving average, and then again crossing the zero line. Okay, this was a fake out, this first one, but it was before the market opened, so you're going to get faked out before. The U.S. market oftentimes behaves differently than the equity markets do, the futures equity markets do, during the European session. Different things are going on in Europe at 1 and 2 in the morning. Different opinions are being expressed. Different positions are changing. And then when the U.S. market opens, the cash is the cash. Opens at 8:30 Chicago time. Keith asks, how do I feel about tick charts? I don't feel about tick charts. I don't get it. It doesn't help me. And, the news-based environment we're in right now, I think it's hard to trade with tick charts, especially with a market like the Russell, which is a little thinner than maybe the S&P. I know a lot of folks follow tick and trend and stuff like that, which I'm not saying that's bad, but it's a different kind of analysis. So, I think the opportunities here are, if you're trading on a 15-minute chart, you're looking for one or two bars of target potential, and then if you end up on the right side of a big trend like you would have today, then you just keep trailing your stop until you get stopped out. I think it's a 2, 3, maybe 4 bar trade. Regardless of your time frame, for a 30 minute, it could be 1, 2, 3, 4. That's 2 hours max, I think, on that trade. And more likely, it's going to be 30 minutes or less. 15 minutes is going to be a half hour or 45 minutes for the trade, right? Especially when you have a normal profile today. Today's not a normal profile day, so anything could happen. Mark says, how do you correlate other markets when trading? How to determine who is the market leader for that day in setting a trend, i.e. mini Dow? Well, that's a good question. These markets are all they're all related, right? So you have on the interest rate side, you'll have the Treasury bonds and Treasury notes, which I think you have to look at side by side with the equity markets, which I think you have to look at side by side with the energy, with crude oil markets, and then again with the U.S. dollar. And the best way to look at the U.S. dollar is through either the dollar index or through the Euro FX and those kind of Japanese yen relationships that the CME offers. And my global chart has all that stuff on it, right? I have 6 different markets that I'm looking at and trying to look for things that might break out ahead of one market breaking out ahead of the other one. So it's really hard to figure out who the leader is. When you look at just the stock index markets, the Dow, the Nasdaq, the S&P 500 in this market. There are some big differences. Boeing is going to cause the Dow to react differently on a percentage basis than the S&P 500 will, absorbing the same news. And the FANG stocks will have a unproportionate effect on the Nasdaq versus the other stock indices. So there could be component things that change. The magnitude of price, but the magnitude of price, they're very heavily correlated to all of the stock index markets. So when we have a China trade tariff issue, this notion that S&P is going to be affected more than Russell, I don't buy it. I don't know. This is my opinion, for what it's worth. All right, so where are we at? So then we can go drill down to a 5-minute chart, which I think is less helpful. But then again, my average time duration on a 5 minutes is going to be, 5, 10, 15, 20 minutes. And I think that these patterns are harder to find with the crossovers with momentum. Now, keep in mind, my momentums are all set at 10. So let me show you what I'm talking about. So this momentum is based on a length of 10. You could play around with it. You could experiment, and that's one of the reasons why we have a sim mode. I'm in sim mode right now, and the sim mode allows you to practice with different settings. The demo account, same thing. It's good for 30 days. If you haven't used it before, try it. You could practice different settings. I have 10 here, and I have the moving average matching that. Moving average length is matching that. But maybe 20 would work better for you. I don't know. in conjunction with whatever other types of analysis you're doing. But I have it set at 10, and that's the default. So Chris asked, so what stocks moves the Russell? Don't forget, there's 2,000 of them. So there's no one component in the Russell 2000 that's going to, even if one of the Russell 2000 stocks goes to zero or goes to infinity, infinity is maybe a little bit of a stretch, but it's not going to have the same impact that Boeing is going to have on the Dow. No way. So this is more of what they call a broad-based stock index, as opposed to blue chips, which is only 30, NASDAQ, which is only 100. Okay, S&P 500 is large cap, but it's broad-based. There's 500 of them. There's a lot of stocks in there. Mark asks, in my opinion, what's the best time to trade? What's the best time during the day to trade? So, okay, that's a good question. So let's take a look at. There's a reason why I have these gray highlights. There's a reason why I have these gray highlights, because this is when the market opens. This is between 8:30 Chicago time or 9:30 New York time, and then 9:30. So this is the market open. This is when the cash is opening up, and this is when a lot of investors start to participate in the market, and this is when the volume is higher, right? So sometimes the Russell 2000 might not have as many pre-market opportunities as, say, the S&P or the NASDAQ or the Dow. So it's harder to trade earlier in the morning. Every once in a while, you're going to see an opinion that's going to be reflected at 4 or 5 o'clock in the morning, Chicago time, in the Russell that at the time is significant. But here's one, 4 o'clock right here, actually. A decent-sized bar, but it's not meaningful to me. It's not meaningful to me. So, trading the 8:30 at the open, I think, is kind of risky. I would like to see how it settles out. So I would say to actually start looking for trades at 8:30 is good, and then by 9:15, a plan should start formulating. And once that plan starts formulating, then there's action to be taken for the next hour or two. Okay, I think that's kind of that's the meat and potatoes of the thing. Certainly at the close, there's stuff that happens, and then when we have a market profile day that's perfect, like yesterday, and let me go back to that. This isn't a trending day. This is a market profile day. Let me just kind of squeeze this back over here. Bear with me. I'm not very good at manipulating software. Here we go. This day here, there was small trading opportunities all day long. As this perfectly, developed bell-shaped curve formed, and remember, this is one standard deviation of prices here. This is one standard deviation of prices in the gray. That's called the value area, and these are outliers, right? These are prices above value, prices below value, and as we oscillate back and forth, back and forth, back and forth around this point of control. It gave traders opportunities to take a few ticks all day long. So this was a good trade. This was, if you're confident that we're going to continue on with a market profile day that looks like this, then, look for places to sell at prices above value, and look for places to buy at prices below value, right at the transition line, or the event horizon line, as I call it. How do I delete this thing? Hang on. It's trying to get me to... there we go. Let's just get that out of the way. Delete, erase strong. Okay. So these are areas. Okay. On a day like today, that trick kind of is not so good, right? We don't have a clear consensus yet. As the day goes on, very possibly, we're going to end up with a smaller bell down here, right? A smaller distribution down here, where a point of control firmly gets established, and there might be more opportunities later on today around this area. But right now, this is a down day, unless something happens that I'm unaware of, and I could be wrong. We could reverse. I'm not too eager to buy anything right now. Right. I know there's a the trend there's a strategy that's we're not going to make new lows. I want to buy. I'm going to buy down here. I'm going to put my stop right below the low, and because we're at the lows. And that strategy could work sometimes, but usually doesn't work. Usually doesn't work. So unless there's other factors that come out, there could be any kind of news announcement or any kind of surprise announcement that comes out that could change this. But until that changes right now, I'm not too excited. And if it does change, momentum is going to skyrocket, right? This momentum is going to go over 100 and it's going to approach 180 or more. And then when that starts to happen, then you can start looking at, okay, maybe this is turning around. Maybe we can buy. So but that's a very conservative idea, and that's my idea on this thing, for what it's worth. Herb, Renko is a whole different idea. We could do a webinar on that. If you go to chartingclub.com, search around, there's some videos on Renko, Flex Renko, all sorts of Renkos at chartingclub.com. Feel free to do that. Let me open up the question and answer box a little bit more. I'll pull up. Okay, I'll pull up a trade ladder so you can. I'll pull up. We'll go ahead and put a trade in right now. Let's try to be a little bit scientific about it. All right. So where do you guys want to go, long or short? Let's come up with an idea. Remember, it's 10:50. We're approaching lunchtime in New York. So let's just pull up a 15-minute chart. And remember, on momentum, just because this line is starting to curl up doesn't mean prices are appreciating. It means prices are depreciating more slowly than they were, right? So, and we have a crossover down here. I don't see any reason, I don't see any excitement based on momentum to actually buy anything right here. From a market profile point of view, we're kind of smack dab in nowheresville. A lot of weakness here. When you see one letter, that's price rejection. The market didn't want it to trade there. So my inclination right now is to try to find a place to sell the market on a limit order, and we wait for the market to come down. So we'll go ahead and put an order in here, and we'll be less conservative than I ordinarily would be, because I do want to try to get a fill so we could kind of just show you how the pricing works and what to look for in a ladder. So I know I asked for everyone's opinion. I do have some shorts here. Very good. So let's go ahead, and you can see here that prices are moving around. So let's try to get a pullback up to, I don't know. Let's try to get a pullback up to here where we have some volume. We have some volume up here. Let's say 1508. We're making something up right now. 1508. I'm going to go ahead and do a two contracts. We'll do 2 contracts, quick click, put a limit order in. And it says here, you'll know, you're trading on a simulator. This isn't a live account. It's real-time data, but it's not a simulator. This blue background, when you see the blue background, that's not real. Gray background is real. So if you have a trading educator that's a little shady, they'll do this. They'll hide the sim words and they'll pretend they're trading live. So be careful with that. All right. So clearly we're not going to get filled here. So I'm just going to show you. I'm just going to do a fill for fun. Let's call that off. Let's just sell 2 at the market. And remember, market is going to give you the best available price, and you usually end up a tick off. You usually end up with a tick slippage. This market's a little thinner, keep in mind, so you could end up with a bigger amount of slippage. But right now, I think we got a tick slippage on that sim trade, and we're short from, and you can see it. The dome is kind of smart. It tells you, 97.90. We're short from 97.90. And as we continue to go down. Now, there's a couple of components here that are missing, right? We're missing a stop, right? I'm just going to go ahead and pick a stop here. I don't know. We'll go 10. For now, we'll go 20 ticks higher, and it's going to be a buy stop, right? Because we're short. So I'm going to click here to put a buy stop in. I'm going to stop. If I'm wrong on this, we're going to have a loss, and that's where we're going to get out. Alternatively, so far so good. This is the open P&L in the trade, $110, $100. I know what you're saying. Why isn't it $50 a point? How could we be up $100? Well, we have 2 contracts on. So let's take 1 contract off. Let's go, 15 ticks down or so, and let's try to see if we can get lucky enough to take 1 off. And the idea here is let's take 1 off, change our stop to 1, and then readjust. This is kind of a Dan Graham's a two-lot strategy that's kind of interesting on here. And let's just go ahead and make this even 10 ticks, right? We'll make this an even 10 ticks. See if we can get lucky enough. A lot of times in these demonstrations, we don't get lucky. We sit here and wait and wait and wait. Nothing happens, but that's okay. I'll go to the questions. EMD, all right, so Chris asked about the EMD. EMD is actually the mid-cap stock S&P. So it's an S&P mid-cap stock index, trying to capture that 2 billion to 10 billion market cap stock index environment. I haven't logged into that market in a long time. It was traditionally kind of small, kind of thin, Chris, and it's worth a peek. You can compare the volume on that versus the Russell. I don't know the answer to that question, although I do know this is just from a general community point of view. This seems to be more popular. Jay Anderson wanted to go long. You were the lone long call. Nope, Chris was the long call too. We had a couple of long calls. No, I mean, I guess it's funny because I guess I was wrong. You're not wrong. Your opinion is as valid as anybody's. And your trade setup and your targets and your stops and your idea is going to be different than mine. It's going to be different than just about everybody's. So both people could be right here, right? There was an opportunity to profit on this trade if you wanted to, if you had tighter, a tighter profit target or a sooner profit target. There were opportunity. Right now we're down $30 on the trade. Time duration is a factor. So there's many different variables before you decide if you're right or you're wrong, right? Who's right and who's wrong. And right now, no one's right or wrong. We're just, we're sitting tight and we're waiting. But when I look at the chart and I see, the candles the way they are, the volume the way they are, the market profile the way they are, the momentum the way they are, I'm not worried right now. I'm not panicked right now. RD asks, and this is a really good question, is there a way to trade on the chart versus the dome? Absolutely. You could trade. You don't need the dome. You could trade directly from the charts in a real simple click your order method. I'm not going to set them up. I'm not going to set that up right now and show you, but I think on our YouTube channel, there's a whole bunch of, not Charting Club might have a couple, but YouTube for sure has how to trade from the charts on Sierra, which is our charts. So I know a lot of people like that. I like the dome. The dome, this trading ladder is faster, right? I can click and click. I can click and click, and I can be very precise. I don't have to drag a line on a dome. And this is I'm just canceling and replacing orders as I click and click. So that's why I like it. And I could add to it. I could take one off. I could take one on. I could put one on. And it's my personal preference. And this actual trading ladder is designed for quick order entry and quick trade execution. And it's kind of unique in that regard. And there's some OCOs down here: simple bracket, trailing stop bracket, multi-bracket, multi-trailing bracket. There's breakout brackets, which you got to go to a different place to get. And then you can do a combination of these. And as a matter of fact, we're going to start doing at Infinity. I think it's going to be Tuesday midday every day, how to use the trading ladder for people who are brand new to a trading dome, or people who have just decided to take a demo account. I think going forward on Tuesdays, we're going to have a quick half hour with me showing people in depth how to use all these different types of OCOs and combinations of OCOs. So, all right, so now I'm stalling because I want to see something get filled. Let's either get stopped out or get filled. Mark asks, that's a tough question. Money management techniques. It depends. Money management techniques are very, very important. And I think the key, I've made millions of mistakes personally by not following my own wisdom or my own advice. I don't know if it's wisdom, but my own advice. And it's when you're wrong, admit you're wrong and get out. Is money management technique number one. When you're wrong, admit you're wrong. And again, this is a random stat I put up here, but I'm not going to cancel it as the market approaches it. I'm not going to move it as the market approaches it. I'm not going to add on to my position as the market approaches it. And that's what I mean by admit when you're wrong, because you will be wrong. You will be wrong. So from a money management point of view, that's kind of important. The second thing is don't over leverage. We talked about leverage, and I get this call all day long. Hey, Jim, what's your day trade margins? And that's a red flag. Oops, all right. So we got one contract out. So now we're -1. And I'll go back to money management in a second. I'm gonna cancel the stop. Now we could do a couple of things here, and this is the Dan Graham's way of doing things, which I like. Is I put a stop at break even, right? So I put a stop at break even. So now half of my trade was a winner. I can't be a loser. I can get stopped out of this second trade, but I can't be a loser. And at this point, I'm looking for a runner, right? So I'm looking for a runner. So I'm going to pick a target somewhere lower, and I don't know. We'll just randomly pick one here to buy one at 96.04. So now I got the second leg of the trade working for me, and I either get stopped out for on the second leg at break even and made $50, or minus the commission, or I'm going to get a benefit twice. Now, there you go. So we were lucky, right? And I'm gonna cancel this. Don't forget to cancel it. And so when I say that's the Dan Graham's a 2-lot trade. He taught me that, I don't know, 2001 is a way to trade off candlesticks in times in times where there's potentially a trend. Now, instead of getting out of the second leg, I could have just kept trailing the stop down. Until I eventually get stopped out and hope that we have, a runaway day on the downside. But I didn't do that. That's another thing you could do on that type of idea. And we got lucky. We could have got stopped out. We applied some science to the trade. But it's a sim trade. Keep in mind, will your behavior be the exact same when money's on the line? Would my behavior be the exact same when money's on the line? That's the trick. That's the hard part. So going back to money management, if you are trading with, depending on what your account size is, if the loss on your trade you could live with, if the loss on your trade is okay, then you could have that confidence in doing what I just did. That's money management. And then the second part of that is don't over leverage yourself. Don't martingale into positions. Don't keep adding to losers. When you're wrong, you're wrong. And a lot of times when you're wrong, step away. Go to Starbucks, get a cup of coffee, or whatever your favorite coffee store is. Some people like Starbucks, some people don't. I don't care. But step away, reset your head, reset your strategy, and take a look at why you were wrong. All right, so where are we at here? Let me get to the questions here. Clarence asks, what's the number? I'm interested in why you're asking this question, Clarence, but what's the limit on number of simultaneous contracts you could enter? So that's a direct function of your account size. So depending on how much money you've capitalized your account with, the more money that you've capitalized your account with, the bigger, more contracts you could trade. But have a conversation with your customer service rep of what your plan is there. For the demo, you could do a 20 lot. I could buy and sell 20 lots all day long, but that doesn't, seeing how much money you could make on the dome isn't practice. You're just messing around. So when you do practice on a simulator or you do practice on a demo account, whether it's ours or somebody else's, try to be as realistic as possible. Trade the size you're going to trade. So I understand the question, but, Be careful. All right, yeah. If you got to go, go. We're really done. I'm just asking questions. I'm just answering questions. Um, so don't worry about that. Charles, thanks for coming. I really appreciate it. Mr. Anderson, thanks for coming also. Greg, are you a customer here yet or no? I threw in the word yes, yet. Awesome. All right, that's good to hear. Anyway, we're going to keep doing these. Next week is on the EuroFX, and we'll probably do a platform one next Tuesday. Feel free to come, whether you're a customer or not. Feel free to join Charting Club, whether you're a customer or not. Feel free to go to the YouTube channels, whether you're a customer or not. We'd love to have you as a customer. If you're not sure where you fit in the futures trading risk capital curve of things, give me a call. I'll talk to you about it. I'm easily I'm easy to find. The Tuesday event has not been set up yet with GoToMeeting, Joe. So the Trading Ladder event will be set up. You'll have a couple different ways to find out about it. One, from our newsletter. If you're a member of our newsletter, you'll get that on Saturday. If you're not a member of the newsletter, just come to our website. By Friday, we'll have it posted on there as an upcoming event, and you'll be good to go. All right. And remember, analyze these things methodically. Start from a weekly or monthly. What's the state of the market? Are we bullish? Are we bearish? Are we sideways? What are the mega levels with retracement, support and resistance, go to market profile, dig down to momentum, and methodically come to the conclusion of would you rather go long or short. All right, I'm done talking. I hope that helps. Be careful, everybody out there. Have a great weekend. Look forward to hearing from you next week.